This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, March 28th, 2019. Our time is 8:05 a.m. Mountain. U.S. dollar this morning at 97.19. Canadian dollar, 74.47. The pound at 1.31. The euro at 1.12. Gold is 12.94. Silver, 15.02. Gold-silver ratio is 86. Platinum is 835, and palladium taking another big hit today, down $100 yesterday. Further erosion today. Palladium is at 1349. WTI 58.36. Brent is 66.63. Nat gas 273. Bitcoin in US dollars 4,851. Bitcoin in Canadian 5,385.11. The Dow at 25,681. S&P 2805. Nasdaq at 7648. The TSX at 16,132. Last week, we were talking about palladium hitting all-time highs. This week, we're talking about a $100 retreat yesterday and further erosion today. Yesterday, it was the largest one-day drop in 19 years. Now, some of the analysts are commenting on what is happening. The tighter emission standards in Europe and elsewhere has led to part of the recent increase, but Russia's export restrictions have been the real driver. That according to Jeff Wright, Executive Vice President of Gold Mining, Inc. Prices for the metal have climbed 4 months in a row through February on tight supplies and expectations for strong demand from the automobile sector because palladium is mostly used in pollution-controlling catalytic converters on gasoline-powered vehicles. It does appear as if the palladium market is possibly seeing some selling interest from headlines touting the potential for industrial rotation from palladium to platinum because of the recent differential of $700 between the two metals. That according to Zaner Metals. Platinum is now much cheaper than palladium, and speculation that the industry may soon reach a point where it will be worth it to use platinum instead of palladium has grown. So far, Wright says he believes the metal has had a normal correction as demand, while up is not dramatically up or changed. However, more electric vehicles will taper demand for palladium, and long-term, he believes in lithium over platinum or palladium. But Harold, a big down day yesterday, one-day drop, largest in 19 years, and we're seeing further hits today.
You better believe it. It's down another $75 today. So again, we've talked about this every day for the last few months. There's just no way in the world that the metal can stay up at that level for that long. Now, I'm not saying that this move is over, but I've seen many, many bull markets and intraday reversals where a market could be down $100, but if there was a true shortage and that is going to continue, that market would have come back. So fact is that we liked platinum at 800. It hit a high of 860. We didn't like palladium at 1600, and now it's down to 13 and change. So fact is that there will be a time in the future that if these type of prices continue, that we will see that the industry will go back to platinum, which should raise the price substantially. So again, we've cautioned you every week, don't speculate in these markets. It's very difficult to buy palladium. You can either buy it physically in coin form or bar form, but it's not popular. It's not like gold or silver or platinum. It's palladium. Most people have never even heard of palladium. So the fact is that it's difficult to buy. In the futures market, you don't want to trade it because if you would have bought futures a few weeks ago, you would have been in huge trouble today. So you always want to stay away. Unless you're an avid trader and know how to trade with leverage, you never, ever want to put yourself in a position where you could lose more money than you actually put into the market. And that is capable when, any commodity makes those type of moves and you're in the wrong direction. So again, I wouldn't touch the market at all. Wouldn't buy it. Wouldn't buy physically in palladium. The only market I would consider would be buying physical platinum, because I do believe that the price of platinum is below where it should be. But again, at this particular time, we'll continue to watch that market. Now, if you have been watching the price of gold. Gold got up to over 1320 this week. So the fact is that gold has been moving. Then you get the analysts come out and saying that gold's going back to 1375, 1380 in that area. There's just no way that gold is going to do that when the U.S. dollar is strong. So as the U.S. dollar broke over 97 cents, it pushed down the price of gold. Gold is down about $20 this morning. So again, if the U.S. dollar is strong, gold is going to drop. And unless it was something, the only other situation that concerned us as far as, gold and the dollar was what was going to happen with Trump and this Mueller investigation. Now that seems to be over. Again, the market should resume on its upward course in stocks, and we should see gold, start to sell off again. So as long as the U.S. dollar is strong and there's no issues with Trump being thrown out of office or anything like that, I just don't see gold running at this particular point. So there are situations out there that eventually could move the price. Number one is that gigantic, 20 some odd $20 trillion deficit. That could definitely affect the markets as we move forward. But again, right now that's manageable. If they're paying the interest on it, if they're not raising interest rates, if the Fed is not raising interest rates, then they can afford it. So at this particular point, I would not chase after these markets. I've always said, let the markets come to you. And that's exactly what we said with palladium, from 1,600 down to 1,374. And the market could still go lower. Unless they really tighten the supplies coming out of Russia, which is something that I would anticipate Russia to do. The fact is that palladium is not going to fall out of bed, and it's not going to drop down below 1,000 type of thing, but it could resume a bull market if the supplies are going to be tight. So again, today and yesterday were just a strong example of never getting emotional about a market. And not buying before, you're supposed to. I've always said that as far as gold goes, unless it closes 2 days in a row above 1380, I'm not touching it. And every time we get close to gold at 1380, that market sells off again. So don't get lulled into this market by reading the prognosticators that are saying that gold's in a massive bull market now and is going to run like crazy. It isn't unless the U.S. dollar falls out of bed. And the reason that we said, a few weeks ago that gold could have run was because we didn't know what the outcome was going to be from the Mueller investigation and if Trump was going to get into trouble. But that's over and behind us now, so I just don't see that as a factor. So I would say just let the market come to us. I think the gold market's going to settle lower, and then we'll see where it is from that point and see what news is in the market and recommend where the market's going to go from there. But unless the market's going to close 2 days above 1380, I just don't see buying gold at this particular time.
Connect with Harold at rarecoloreddiamonds.com. His website is rarecoloreddiamonds.com, and you can sign up there for our free weekly newsletter, the companion to the podcast. The story we're going to talk about is from last week's newsletter. I think it is worth talking about because it's very interesting to take a look out to potentially what could happen in the next few years. One of last year's best performing hedge funds says the trade of the century, and that is a very strong statement, is to buy gold and sell stocks as risk assets are due for another meltdown. It's only a matter of time until the bearish bet pays off, according to Crescat Capital LLC. Well, the Denver-based firm has only about $50 million under management. It has a history of outperforming the S&P 500 index, with its global macro fund returning 41% last year alone. Now the investment company says it's ready to capitalize on an end of the economic cycle as indicators warn that a recession is imminent in the coming quarters. The consensus is pointing to a recession in 2020 or 2021. Tavia Costa, a global macro analyst at Crescat, said by phone, "We think it's a lot closer than that, and we have a number of of macro timing indicators that we look at. But what they're suggesting, shorting global stocks and going long gold. And Harold, I think you're right. Now isn't the time, but they could be onto something here in the next few years where when we see the stock markets go down, and they will have to eventually, then at that point, gold will be a strong place to be.
Well, again, the advice that they're giving is not for the novice trader. And if you're talking about timing, it's 2019. We're a third of the way through 2019. To carry a long and a short position for a year or 2 years is expensive. And along with that, to go long gold, either you have to buy it physically and buy the equivalent amount in short stocks. And what type of stocks do you short? So, if they were as good as they tout, they'd have a lot more under management than what they have. The major hedge funds have billions and billions under management, and they don't. But again, it's a recommendation that at this particular point doesn't make sense to me.
This is a story that really stunned me. When I saw it, I just thought, what are people going to do? Half of older Americans have nothing in retirement savings. The bad news is that almost half of Americans approaching retirement have nothing saved in their 401ks, which would be the equivalent to an RRSP in Canada or any other individual account. Harold, what are people going to do when they get to retirement age and they have no money? The money that you would be getting from the U.S. government for Social Security would not be enough to get by. I can't fathom what the tsunami of problems are going to be here in the next 10, 15, 20 years as people go to retire and have zero saved. It's scary.
It is frightening. And as we've talked about in past shows, in 2008 and 9, when the market plummeted, it took almost all the money out of the market. Trillions and trillions of dollars were lost. The middle class got killed, and they didn't hold on to their stocks. And the market plummeted, and they got forced out of their positions. So basically, they lost almost all their money and didn't have the wherewithal to maintain the positions like the wealthy did. So when the markets plummeted, went from 14,000 down to 6,500, most of the middle class got wiped out. Their retirement funds got wiped out of the market. And then when the market came back in this bull market, they didn't have any money to buy back in. Plus, they were petrified when the market fell 50% or even more than that, that the market was just unstable and it scared the life out of investors. So you've got a 10-year bull market where from 2008 and 9 till 2018 and 19, the market went from 6,500 to 26,000. So you've got a 20,000 point increase in the Dow during that 10-year span, but the middle class was not involved. And when they saw the market running, they didn't have money to buy Google at, in the hundreds of dollars in. And all the major stocks like Amazon and Apple and Tesla and all those, stocks that were skyrocketing. So it doesn't shock me that they got wiped out of the market, didn't have enough money to buy back into the bull market. And now we're sitting there at an age where, you're 60, 65, 70 years old and you can't retire. In actual fact, that's where most of the money from the retirement savings plans from the 401ks went to. It was lost in the marketplace. So, no, that's a huge problem. There's no way that the U.S. economy is doing phenomenal. It isn't. The wealthy made a lot of money, and the poor and the middle class didn't. And now, they're going to pay for it because there's no recourse. There's no way of getting that money back. They don't have the money in the market, and they don't have the wherewithal to trade the markets. Let's face it, who really knows what's happening in a market? So in desperation, people do things in the market that they should never, ever do. They're so desperate to make money, and they realize that their situation is dire, so they make moves in a market that they never, ever should make. That's why we always say, don't trade in markets that are leveraged. Don't trade markets that you don't know anything about. And, again, there's times to be in the market and times not to, and now is not a time for most people to be in the marketplace. So we all know that the Dow is a gambling casino. Most people that trade stocks lose their money. Most people that trade commodities lose their money. So where is the middle class and below? Where are they going to go at this particular point? The only asset that they may have is in their home. And don't forget, during 2008 and 9 in the mortgage crisis, a lot of people lost their homes, lost their credit rating, and could never, ever get that back again. So, yeah, the situation is dire. There's a lot of people that will never, ever be able to retire, or if they do, it's going to be at a fraction of what they earned before because Social Security just doesn't pay that much.
U.S. budget deficit hit $234 billion in February, a new monthly record. United States is $22 trillion in debt. They need to raise the debt ceiling. That has to be done through Congress, and no doubt will be one heck of a fight. Federal Reserve Chairman Jerome Powell warned earlier that deficits matter, saying the country's fiscal stance definitely needs to be addressed. Deficits going forward of $1 trillion to $1.5 trillion a year. So at some point in the not too distant future, you could see the United States in debt to the tune of $25 to $30 trillion. And if the Democrats get into power, as we talked about on past podcasts, they're talking about trillions of dollars of new debt to fund programs as they hand out money. Harold, debt does matter. Deficits do matter. The guess in all of this is, when does it matter? When will the United States hit the wall? That is the great question. At this point in time, it doesn't seem to be a major issue, but as Federal Reserve Chairman Jerome Powell says, deficits matter, and it will need to be addressed. Hopefully for the United States' sake and their citizens, it happens sooner than later, because at some point you have a situation where people just say, that's it, we're cutting you off, and then the United States is in real trouble.
You better believe it, and that's why Trump was fighting so hard, for the Federal Reserve not to raise interest rates, because every quarter point that goes up, the cost to the debt, the interest on the loan is astronomical, and things are not going that well between the U.S. and China. In actual fact, things are not going well with China and Canada. And a story I read the other day that was shocking to me was that there was a high-level Chinese official that Canada arrested to help out the United States. And China got so mad that they canceled pretty well all of the canola shipments and business from Canada to China. Every company that sells canola oil to China was cut off, all because that Canada did what the United States asked them to do, which was to hold this Chinese official for whatever the reason was. And now the repercussions are that Canada's multi-billion-dollar canola oil industry is going to be destroyed. They can't find other buyers at this point here, this late into the action.
Very difficult situation. It's Huawei, and they're a company that produces cell phones. It's a very tangled mess here. By law, the Canadian officials had to arrest her. Now where it gets interesting is, do they send her down to the United States, extradite her? And that is the big fight that is taking place right now. But China is fighting back many different fronts, and including canola seeds and canola in general. That is a major concern for Canadian farmers. Now, President Donald Trump's top negotiator, Robert Lighthizer, and Treasury Secretary Steve Mnuchin are in Beijing for talks to seek an end to the trade standoff between the world's two largest economies, with hopes of a breakthrough remaining low. Harold, we do have a serious situation on our hands in Canada, and we've been drawn in primarily by the United States as a result of arresting this woman. It is a very difficult situation.
Yes, it's almost like a no-win situation, and it's unfortunate that it's going to happen because Canada's in a rough position anyways right now. The dollar is falling. It could easily drop to 71 cents. But if it breaks 71 cents, if it breaks 70 cents actually, we could see a free fall in the market that could take it down into the low to mid 60s, which is about a 17% drop from where the market is right now. So again, a weak dollar does help exports, but if our export business is not strong, it's not going to help us that much. What's happening with China is, it was all done because of the United States. The fact is that deals that have been made with presidents prior to Trump were made for various reasons. And I don't think that Trump was necessarily privy to all of the details of these deals. So he walks in as a new president and said, this deal stinks, but he didn't know the other negotiations that made that deal actually happen. So the fact is that it's probably going to get worse before it gets better, because Trump is not the type of guy that backs down. He's not going to lose his reputation as a tough negotiator and let people walk all over him. And that's the way I see it. I just don't see the situation getting better at this particular time. And the fact is that it's hurting a tremendous amount of corporations in the United States that deal with China. So, I just don't see where this is going. I really don't.
We mentioned last week, TD Bank analysts predict the loonie, which is currently worth about 75 cents US, could fall to 71 cents sometime in 2019. At 71 cents US, $1 would cost 140 Canadian compared to approximately 135 today. Another analyst from Fidelity is even more pessimistic, believing the loonie could drop by 17% to 61 cents US, with $1 costing 161. Harold, that is a huge concern for Canada. If the Canadian dollar gets down to those levels, that's the last thing we want or need.
You better believe it. The Canadians won't be able to travel. I mean, losing 40% off the top is just not something that's comfortable for anybody. So, just coming across the border is going to cost them a fortune. It's an unfortunate time. The fact is we've been doing the radio show for a long time, you and I, Randy, and we've seen a lot of changes in currencies and metals and commodities and stocks and all that type of thing. But when they get to this level, the market just has an eerie feeling towards it. And that's why I've said for quite a while now to stay out of these markets, because, the fact is that it's trading in a range, and unless a market's going to break out, and you don't know that for a fact, you're gambling. And if you're gambling, the chances are you're going to lose your money. Let's face it, the casinos in Vegas were not built on people that make money. The commodity markets are not built on people that make money, believe me. The fact is that the commodity markets, the futures markets, were built for hedgers, farmers and producers and miners and that type of thing, to ensure that the marketplace doesn't destroy them financially with their crops and things that they're selling and services. So, but it doesn't work without speculators. You just can't have a market of people that are in there just for hedging purposes. You need the liquidity of investors that are going to speculate that the price of corn or soybeans is going to increase or decrease, and they're looking to make money off of that. So, right at this particular point, the reason that you're seeing such huge swings in the metals markets and in palladium especially is because the market moved up way too much too quickly, and when the market does come down, it comes down ferociously. And if you're the wrong way in that marketplace, if you're one of the ones that said, oh my God, I'm missing, the bull market in palladium and jumped in at 14 or 1500, you got margin calls today. That means you're getting called up by the exchange saying either put up more money or lose your position. And that's a position that if you want stress in a market, you've never seen stress until a market starts to fall $200 in a day like palladium did, and your broker calls you and says you got to come up with this amount of money within the next hour or you lose your entire position. So again, that's something that we never, ever recommend to clients ever to leverage positions, because leverage works for you and against you. And when a market goes against you, which it normally will do, the fact is, again, 90% of people that trade on their own without an expert lose their money in stocks and commodities. So I don't know why people think that they're, going to do better than that, and then put yourself into a position where you've leveraged your position. You're looking at losing, in some cases, almost all the cash that you have. So something that we recommend that you do not do, and don't buy into a market that's already made a gigantic move. When we first recommended long-term palladium, it was at $170, and it hit $1,600. For those that bought physical palladium and just put it away, have made over 1,000% return on their investment. So that's the type of thing. When we recommended gold back in 2000, we recommended buying physical gold at below $300, and it went all the way to $1,900. If you leveraged gold, even though gold was in the biggest bull market of all time, you probably lost your money, because there were several times during that bull market that gold pulled back. And if you happened to have bought gold at the wrong time and it pulled back and you were leveraged, you had a margin call, you had to come up with additional money immediately or lose that position. But those that bought gold at 300 and rode it to 1,900 made a fortune and didn't have to worry about being called on margin calls. But people that just recently bought palladium because they felt that they were missing this bull market ended up getting hammered the last couple days because the market's fallen $200 in 2 days. Again, situations that we never, ever recommend. What we did recommend was buying physical platinum at $800 and just buying platinum bars or coins. And the fact is that the market's up about $50 from where we recommended it. But always buy the physical. Never put yourself in a position to be heavily leveraged where the market can go against you and get knocked out of the marketplace.
Speak with Harold about hard assets. RareColoredDiamonds.com is his website. We'll talk about diamonds here momentarily. We want to update you on the situation in Britain, and it is chaotic, to say the least. Do you think there are challenges in Canada and the United States? In Parliament, British MPs seized the chance to take charge of the way forward for Brexit and failed to agree on anything. So here they are, don't agree with the Prime Minister, Theresa May, and how she's been handling it. They take it over. All 8 motions voted on, from no deal to cancelling Brexit, failed to reach a majority. So obviously they just can't agree on anything. Options are now rapidly running out, even with Prime Minister Theresa May offering to resign, seeming to not get a deal done. Parliament gets another chance to vote on a way forward on Monday, which may bring a different outcome. May could ask the EU for a longer extension, or she may even call an election. But over in Britain with Brexit, they're having a lot of problems. Harold, you can just see at times you get so many people involved in these scenarios and you just can't get consensus. Britain, they had the original Brexit vote. They're trying to separate from the European Union, and it is just a mess.
You better believe it. So when you look at the entire world situation financially, it's a mess. Europe is a mess. Obviously, this Brexit situation is a disaster. Then you've got China. Don't think that China is doing great. China is not doing well. They've lost a lot of U.S. business, and now they're losing a lot of Canadian business. Canada's in trouble. Obviously, with the oil industry the way that it is, with the canola situation that I just spoke about, with the potential of the Canadian dollar dropping not only to 71 but possibly 61 or 62 cents, would be disastrous. The real estate market's not doing well. The U.S. is not doing great. 50% of senior Americans can never retire. So how great are things around the world right now? Why in the world would we consider investing our hard-earned money in markets that have that are trading in ranges right now and have the potential to fall substantially? The currency markets, the chances are is that with Brexit, that the British pound is going to plummet. But I would never recommend to most investors to short the British pound or to short the euro because the fact is that they're leveraged, and if you don't know what you're doing, you're going to end up losing your money. You could be right in your market, but you could be wrong in your timing, and you could end up losing everything. So again, at this particular point, we've made top-notch recommendations in the past. Right now, the best recommendation I'm giving is not to do anything in these markets. The fact is that the Dow could start to move back higher because Trump is no longer in trouble. And then on top of that, there's not going to be another rise in interest rates over the short to midterm. So at this particular point, the U.S. dollar should strengthen against other currencies like the British pound and the European currencies and the Canadian dollar, which is going to plummet. So at this particular point, where are these world economies going to, and where are we going moving forward? Gold is trading in a range. At this particular point, if the U.S. dollar is going to strengthen, the move for gold is to go lower. It could easily go, back into the 1100 ranges. So again, at this point, until something concrete happens to where we can make a recommendation on the upside, at this point, we've just got markets that are trading in a sideways pattern, and you cannot make money in a sideways market.
Let's give you an update on diamonds. Lots of good information this week. Harold's website, rarecoloreddiamonds.com. We found out who picked up that 13-karat Lesotho pink. It was added to the portfolio of Graf. Graf is preparing to cut and polish the exceptional 13.33-karat Lesotho pink that sold for $8.8 million in February. Blue continues to be the star of the show when it comes to the auction world. To give you an example, twin stone fancy blue diamond ring could fetch $8 million. Christie's New York auction pre-sale estimate is $6 to $8 million. A blue diamond is going to lead Sotheby's New York auction. Fancy intense blue diamond ring with an estimate of $2.5 to $3 million. Cut cornered square modified brilliant cut 3.24 karat stone flanked by two pear-shaped diamonds. Harold, blue diamonds continue to be, along with pink, red hot.
You better believe it. Blue diamonds have gone up more than any asset that I know of over the last 10 years. I remember back in 2005, we saw an auction where a high-quality blue diamond was selling for $500,000 a carat, and now that same diamond would sell close to $5 million a carat. So over the last 10 years, blue diamonds have gone up more than any asset that I know of. They're so ridiculously rare that, again, with all the disarray, with everything that's happening in the world markets and the uncertainties and the currency markets and the fighting with, China and the U.S. and Canada and Brexit and everything going on, and the markets, again, you wake up and you're making a fortune in palladium one day, and now it's down $200 in 2 days, and you find yourself in margin. Not everybody does that. The smart money goes into hard assets, extremely rare diamonds, rare paintings, rare cars, assets that not only hold their value, but never decline in value and give you, satisfaction, puts a smile on your face, when you put a $10 million blue diamond on your finger to go out for an evening. I mean, that brings a smile to your face. To get into a $5 million Ferrari, it brings a smile to your face. But to hold a stock portfolio on Amazon that's down 40% in 2 months, that doesn't bring such a smile to your face. That's why diamonds, art, classic cars, assets like that go to the rich and famous, because that's where they're comfortable keeping a large part of their money. And let's face it, the markets giveth and the markets taketh away. And the fact is that all these paper transactions that happen, you could wake up one morning like in 2008 and see something happening and the market's down 1,000 points. And next thing you know, everybody's selling, panic selling, and the market's dropping 2,000 or 3,000 points and you can't get out. So that's where most people end up making the big mistake. But, a lot of times when we talk about, these sensational diamonds that are being auctioned off and hitting prices that are astronomical, most people could never afford that. How many people could afford an $8 million or a $10 million or a $50 million diamond? Very, very few. But if you look at auction prices of medium price diamonds in the 100,000, 500,000, 50,000 range, those diamonds do tremendously well also. So it's all relative to how much money you have to invest. The fact is that markets have their own timing. And right now, I see that with the markets in disarray and everything happening in the currency markets around the world, I see hard assets, meaning diamonds, art, classic cars, as doing better than any investments out there. And these are not assets that you leverage. These are not assets that, you're going to wake up one morning and find out that the market has fallen out of the blue diamond. It's impossible to happen. There is no blue diamond market. So seldom does a blue diamond come onto market that it's a rarity. It's not like there's a large amount of these diamonds that somebody's going to dump, 1,000 blue diamonds on the market. That could never happen in our lifetime. And the same with pinks, because we know that the Argyle mine is closing next year. They produce 95% of the world's pink diamonds. And if that mine closes and there's no more, do you see the price of pink diamonds going down when there's nothing available? Economics 101 is when supplies are low, prices go higher. When there's demand for a product and there's no product available, just like palladium, when there's no palladium on the market, they could ask anything they want for that, and people that need that will pay that price. Well, that's basically what's happening in the hard asset market. And when I talk about hard assets, I'm not necessarily talking about gold, because gold is a market, it's a commodity that trades on an exchange. So you've got speculators and hedgers that control the market in gold and markets like that. Nobody controls the price of a diamond. It happens through auction, through bidding. So nobody controls that. So I think at this particular point, with the state of the world economy and with what's facing us straight in the eye with Brexit and China and Canada and the United States and all of Europe, I think we need to look at other assets as far as putting away for our family. Now, one thing about diamonds is it's a long-term investment. You don't buy a diamond and sell it in 2 or 3 years. You're not going to make the money. You hold on to these diamonds for a long period of time, and your family can do extremely well. The best example I can give you is Shirley Temple. Her father bought her a blue diamond in 1940 for $7,100 and sold it in 2018 for $25 million. From $7,100 to $25 million. Now, does that happen all the time? Of course not. It's a rarity. But the fact is that it was held for 78 years within the family, and an investment of $7,100 turned into $25 million, and that's what I call real money. So, again, these are the recommendations that we continue to make to our clients. You can still get involved in Argyle Pinks. We think that the pink market is going to increase substantially as the market in pinks dwindle, because there just won't be any pink diamonds available. Argyle produces 95% of the world's pinks, and the fact is it's a very, very small number. You're not talking about thousands of diamonds or hundreds of diamonds. You're talking about 50 diamonds from the Argyle tender that could fill a champagne glass, and that's basically the whole year's supply of Argyle tender diamonds. 55 diamonds for the entire world, and that market is going to close out in 2020. Give it a couple years for Argyle to get rid of whatever inventory that they possibly have, and then we're talking about a market that will never, ever happen again. There are no new mines coming online. Nobody has found another line of pink diamonds anywhere in the world, and if it did, it could easily take 10 years to get that mine back online. So, within the next 10 years, how high are pink diamonds going to go? I don't think that there's any cap. I don't think that there's any limit, because if you're talking about some of the world's most beautiful diamonds, and if Graf is paying, what did he pay? Harry Winston paid $50 million for a pink in 2018. Graf has paid $40-50 million for pinks and blues in the past, and those are not even the rarest of diamonds. The rarest of diamonds are red diamonds. Very seldom do you ever see a red diamond become available for sale. Yellow flawless diamonds do very well. Deep flawless white diamonds do very well. I think the next major bull market in diamonds is in green diamonds, and that's where we're concentrating on greens, but they're very, very difficult to get. Most of them come from South America, and they're very, very hard to get. A diamond turns green because of uranium seeping into the ground. A diamond turns blue because of boron seeping into the ground and changing the color of what would have been a white diamond to blue. What changes a diamond to yellow or orange is nitrogen. And what turns a diamond green, as I mentioned, was radioactive uranium. So the mystery, the biggest mystery in diamonds is what turns a diamond pink or red, and the experts do not have a clue. They're saying it's the molecular structure of those diamonds, but the fact is nobody knows for sure why a diamond turns pink. Once the Argon mine closes, there will be no more pink diamonds available, and my clients own the lion's share of investment quality pinks. So when the timing is right, we own H. Siegel Fine Auctions, and we'll start to auction off those pinks, but we don't want to do it prematurely. We want to give ourselves an opportunity to make an awful lot of money, and realizing that most people will not make any money in retirement. Their stocks will not perform. Their cash will not perform. They haven't put enough money away for retirement. But if you own a diamond, the chances are you're going to have something that is going to be worth a lot of money when your timing to retirement comes. So that's the way I'm looking at the diamond market right now. I think it looks great. And I think there's tremendous opportunity. And this is not something that you leverage. This is something that you buy, you own, it's shipped to you. You keep it in your safety deposit box or put it into a ring and, let your wife enjoy it. But when the time comes to sell it, we own H. Siegel Fine Auctions, and that's why we built that company, was for our clients to sell their diamonds down the road when the timing is right to do so.
Speak with Harold at rarecoloreddiamonds.com. His website, rarecoloreddiamonds.com. A couple of notes before we head out of here. An Emirati perfumery claims it has created the most expensive perfume in the world, $1.3 million. Also, a champion-bred pigeon sold for $1.42 million at auction. I know the pigeons around the building that I live in, I wouldn't be paying that kind of money. I would prefer to do something else to them. Pigeon racing in China is a big sport with race purses in the 7 figures. And finally, Harold, we have to acknowledge one of the greatest tight ends in the history of the NFL, Rob Gronkowski, retiring from the NFL. I know he's going to have amazing things in his life in the future. He's only 29 years old. His agent came out and said, well, maybe he could come back, possibly. I hope for his sake he doesn't. He gets into something else. He'll be successful at whatever he does, but one of the all-time great tight ends. Harold, he's heading to the Hall of Fame without a doubt.
No doubt. Rob Gronkowski, one of my favorite players of all time. Just did a lot for the sport. When you read a lot about sports athletes and all the bad that they do, they lose their money, they get into fights, they beat their wives, they beat their children. You take a guy like Rob Gronkowski, a 29-year-old real gentleman, beast of a person. He's 6'6", 265 pounds, had one of the greatest careers with New England, but was so charitable. And what he did for children and showed up to parties and and kids with cancer. And this guy was just an absolute gem of a person. And where people think that he wasn't all that smart because he's the Gronk, he's put away all of his money. He didn't spend any of it. Just a brilliant young man who had a great career, really got beaten up a lot, had several injuries and operations and things. Now, do I think that if the Patriots are going to go into the playoffs and have another Super Bowl run, that Rob could possibly come back and help? It's possible, but I highly doubt it. If you haven't played for the season, the chances are that you're not going to do that. But I think, like you do, Randy, he should walk away with a phenomenal career and 3 Super Bowl wins and a lot of money, and he's got a great future in acting or in the wrestling rings. But whatever Rob does, we wish him all the best, and thank you for 9 years of phenomenal entertainment.
Tony Romo wants $10 million to stay in the booth at CBS. I'd love to see the Gronk in the booth commentating on a game. That would be very fun and exciting. Harold, thank you for your knowledge and another great podcast.
My pleasure, Randy. I wish everybody a wonderful weekend, very profitable day.
Connect with Harold at rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We'll talk to you next week.